What's up, guys? I'm Mike from StockedUp, and welcome back to the Stocks with Mike and Tom show. In this episode, we have a lot of news that we're going to be going over. There was some news with the United Kingdom on how they're locking down again. We have news with Dunkin'. We have news with cruise lines and just the market overall. This week is election week. It's going to be a crazy week. And probably very volatile. So there's a lot of things going on in the market right now. So make sure you guys stick around to the end of the video. And we also have an $11.2 million options trade that expires this Friday. So make sure you guys stick around to the end of the video. And if you guys aren't subscribed already, don't forget to subscribe. But let's get right into it. So Tom, what happened over the weekend?
Yeah, the huge news over the weekend was that CNBC reported that England's going to enter a second national lockdown within the next few days. And Boris Johnson announced that they would enter a lockdown phase all the way up until December 2nd, which is insane. That's going to be over a month of being locked down. And a lot of people are really worried about the United States also getting locked down. And obviously, that would be a huge cause for concern, especially with the market and the way it's been going lately. I mean, if we shut the economy back down, you could see stocks tank 20 to 30% easily, just like you saw them do the last time.
Yeah, I mean, we already saw France lock down last week. We saw Germany lock down. We're seeing the UK lock down. And if the US keeps having cases rise like they are, and, I really hope we don't lock down. But obviously, if we do, that would be a big threat to the market. So keep that in mind. If the United States locks down, that would not be good for the market.
They're actually going to vote on it early next week. So hopefully they don't vote that into place, but it's really expected that they will.
Gotcha. What else happened over the weekend?
Yeah, the U.S. enlists pharmacy chains to help vaccinate against the coronavirus, according to the Wall Street Journal. More than a dozen chains will serve as vaccination sites. And WBA, which is Walgreens, will be one of the biggest ones, as they're one of the largest pharmacies in the U.S., along with CVS, Walmart, Kroger, Publix supermarkets, and Costco wholesale group are among the companies that have agreed to participate, according to the CDC plan that was issued on Friday. And this is a really big plan that they have upon rolling out their vaccinations. And this is part of the second stage, where hospitals are going to be part of the first stage of the plan. But the second stage is going to be really focused on getting the vaccinations out to the public as quickly as possible. And that's why the US is going to use these pharmacy chains for this mass distribution.
Awesome. So that should be great news for them. Looking at Walgreens, which is WBA, they had a pretty bad year. CVS didn't have the best year either, but Walmart's doing pretty decent. Costco is doing also pretty decent. And then how's Kroger? Oh, they're doing okay too. So that should be good for those companies. And then what's up with this Dunkin' news?
Yeah, the Dunkin' news is actually pretty big. They're actually going to go private in an $8.76 billion deal by the owner of Arby's, which is Inspire Brands. And they're going to buy them for $8.76 billion, like I said. And this happened on Friday. And it's going to bring chains like Arby's and Dunkin' Donuts under the same umbrella in one of the largest restaurant deals to date. And this is an awesome deal. And Dunkin's is actually going to go private.
Awesome. So how about we look at their chart, DNKN. So they actually gapped up recently on earnings too. So they seem to be doing pretty well. What are you seeing?
Yeah, I really think that they've exploded lately. I didn't expect to see them do this, but it's really nice to see that they're getting bought out. And it was probably a good sale by them selling at the top.
Yeah, awesome. And then with the last piece of news, what is going on with cruise lines?
Yeah, this is actually really big news for RCL and CCL and NCLH. This is awesome news. They're actually going to be able to start going back to sea again. And to resume carrying passengers, the companies have to demonstrate that they have procedures for testing, quarantining, and isolating passengers and the crew. They will have to build test labs on every ship and make their own arrangements to isolate or quarantine passengers on shore if needed. Before being allowed to sail, they will have to conduct mock voyages with volunteers playing passengers who get sick, the CDC said. So they're going to have mock voyages of people faking being sick, just so they can make sure that they have all these procedures locked down. And they have to have labs on the ships, and it's going to require a lot of things from these cruise lines. But obviously, it's going to be great for the cruise lines if they can get back on the ocean and start generating money again.
Yeah, that's a good point. I mean, I know there's like certain procedures that they have to follow, but just the fact that they are able to, to resume their business, that's going to be great for the company. Like you said, we're looking at RCL, CCL, and then NCLH. Cruise lines have really taken a beating this year, and just the fact that they can finally resume business, that'll be great for them.
Yeah, and they really had bad timing. Like if the virus really would have happened in the beginning of November, possibly, they could have generated money over this summer if we would have opened up. But the timing was just really off for them. So it's really going to be possibly down for them until the next vacation season comes around, which is like between February and July.
Awesome. So now let's get into our member of the day. Today's member of the day is Sean C. He's always leaving great comments on each YouTube video, and he's just always supporting the StockedUp brand. So just thank you so much for Sean C. Just for supporting us so much. We really appreciate it. So now let's get into our momentum plays for tomorrow. And the first one is Amazon. So Amazon, like a lot of other tech stocks, took a beating on Friday. They're down about 5.5% after earnings. I mean, it's not looking too good. What levels should we be watching for the downside?
Make them fall below 3,019.
All right. And then Tesla, too, also down about 5.5%. What levels should we be watching?
Make Tesla fall right below 379. That's a pretty good support on that.
Awesome. And then we have Apple.
AAPL, make Apple fall below 107.50.
All right. And then last but not least, we have Netflix.
Netflix, make them fall below 472.
Awesome. So yeah, all these tech stocks really took a beating on Friday, and they're all down between like 5 and 6%. So tech stocks really suffered on Friday, and we're 2 days away from the election, so there's a lot of volatility in the markets. I remember in 2016 the markets fell right before the election and then popped after Trump won. So I don't know. That doesn't mean that the market's going to pop after Tuesday this week. Because we don't even know if we're going to have a clear winner by Tuesday. And I think the more uncertainty there is in the markets, the worse it's going to be. We are still right through earnings season. We have COVID cases rising. We have the election this week. Are we going on another lockdown or not? Like, will the election actually end on Tuesday? So like, there's just so many variables and uncertainty in the market right now. And the more uncertainty, the worse it is for the markets.
Yeah, and here's actually a daily chart of the S&P 500 futures during the last election. You can see that the few days leading into the election, the market was falling, but almost somewhat consolidating. And you can see a few days after the election, we saw green. But look at this one day on November 9th, a couple days after the election, you can really see the volatility in this green candle. I mean, that volatility is crazy.
That has to be a glitch, or at least I hope.
Yeah, I hope so. But the good news is that at least the volume was up that day.
Yeah, so I think it's a glitch, but if not, just the point is that there's a lot of volatility around elections. And just because in 2016 we exploded after the election, that does not mean we're going to see the same thing this year. This year has been crazy. There's a lot of changes from where we are right now in the world compared to where we were in 2016. So please keep that in mind. So now let's get into our unusual options activity for tomorrow. And the option is the Apple 110 strike call options that expire this Friday, November 6th. So there was about $11.2 million put into this play. I mean, we're close to the money, but we do have elections this week, and there's just so much uncertainty. I mean, I don't even know what to say on this. I'm just going to point it out. Look at someone put about $11.2 million in the Apple 110 strike calls that expire in 5 days, right? There's a ton of volatility in the market right now. And I think the best way to play this is just kind of like a momentum trade. So if we see the market with a lot of upwards momentum on Monday or Tuesday, then it might be worth a trade. But to actually say if someone's longing or shorting these options right now, there's just no accurate way to tell. So now let's get into our comments from the previous episode. With the first comment, we have D saying, great video, guys. If we do dip back near March lows, what are Mike and Tom's top stocks to buy? So this is a hard question. So a lot of it depends on what the market is doing at that time. But we do have a couple stocks that we picked out. But like I said, this can change depending on what's going on in the world and what the market is doing. But here are a couple stocks that we're looking at right now. Tom, I'll let you take the lead.
Yeah, a couple of my favorites are actually 3M, which is obviously 3M's as the ticker. And 3M is just an awesome stock. They're going to be pretty good over the long term as they do a lot of different stuff. And they've also gotten into some COVID manufacturing over the past couple months, which should help them out as well. And they do have some government contracts for that. And another big one will be Nvda. I really like them for the long term as they're a tech stock. They do a lot with AI as well as AMD. Both of those companies are going to be really big. And then other than that, I really like the SPY and the QQQ. I know Mike's been talking about picking up the SPY and the QQQ if they ended up falling. And I think those will be great pickups, especially the QQQ, given that the tech sector is almost outperforming every other sector whenever the market's going well.
Yeah, so I was looking to get into some of the SPY, some of the QQQ, a little bit into some Dow stocks. And I was also looking at DraftKings. So DraftKings, I think, has a lot of potential for the long term. It's risky, but I think it doesn't hurt to pick up some shares. They actually had a pretty solid dip down the past month. So I'm looking to pick up some DraftKings for the long term. And then also it depends on how the economy is doing. So this is like a strong, if this happens, then I might look at bank stocks. It just depends on the market. So I don't love bank stocks right now. It depends on how the market and how the economy is doing. If everything's going good, then I would also look at bank stocks. But the main thing, SPY, QQQ, some of the Dow in DraftKings. So, and then a couple other little ones, but those are the main ones for right now.
Yeah, and DraftKings might actually have some good news come out with the election if people vote to legalize sports gambling in certain states.
True. So now with the next question, we have SoCal saying, thanks for the response to my question. This is the first time I'm selling a put, but I remember what you said, Mike. If you want to hold the shares, this is a good way to go about it. Also, I want to get into selling some covered calls on shares I already own. So so he was referencing selling the cash secured put. He asked a question in the previous episode. But basically, if you like a stock for the long term and like you really think it's going to go up in the long term, selling puts is really the way to go. It's very popular among institutions and like influential investors. And basically what you get to do, like the whole premise of the strategy is you get paid to buy stocks that you like at a discount. And if we look at an example, like let's say we look at, let's say we look at DraftKings, right? If we look at the DraftKings stock right now, it's sitting at about $35. If you like this stock for the long term, what you can do, you can head over to the options chain. You can go to the November 20th expiration, and you can sell a 30 strike put option right now, and you could get paid $150. If DraftKings is at or below $30 by expiration, you are going to have to buy 100 shares of DraftKings at $30 each, right? But if you like DraftKings, you should have no problem with buying it at $30 if it's at $35 right now. And for doing this whole deal, you get paid $150. Let's say DraftKings is above $30. Then basically you just keep your $150 and run. So the whole premise of the strategy is buying stocks that you like for the long term at great prices. And this strategy only works if you like the stock for the long term. And then once you have a couple hundred shares, you could go, well, actually you only need 100 shares. You can sell covered calls where you can basically sell stocks at a price a lot higher than what they are right now. So that's a different topic for another video, but cash secured puts are definitely a great way to go about investing for the long term. All right. And with these next comments, we have N saying, thank you again for all the trending stock updates. Please keep us updated on Workhorse and SPCE. So Tom, what's going on with SPCE?
Yeah, SPCE, they're actually trying to get a test flight going. They actually have not even ran a test flight yet. So that's probably why they're down, but it's just a really popular stock to trade whenever it's on the way up, obviously. So personally, I haven't been trading it the past few weeks, but I'm really just waiting. It's coming close to a long-term support or a long-term trend line, as we can see here. And I think once we hit around $17, maybe $16.50, we might hit that trend line, but I don't really see SPCE turning around anytime soon unless they do have a successful test flight or they have some news come out. I don't really see them beating on earnings as they can't even run flights yet. So the earnings I don't see as being too big of a deal. But the big thing is I think is once they get that test flight going, then they'll be golden. But they have not even announced a schedule for their test flights.
Gotcha. And then how about Workhorse?
Yeah, Workhorse. I don't know too much about them fundamentally. I know that they are kind of like NIO and Tesla in a way, but they build electric cars. And really, they've fallen below the 100 SMA lately, and they've fallen out of their long-term trend. It's just one of those stocks that got pumped up so much that it's really starting to come back now. And I remember whenever the stock was around $24, I was on here saying, be very careful of holding Workhorse because it could easily fall back down, and it's fallen all the way down to $15. And I honestly could see it keep going, but I'm not sure I see it falling past maybe 13.50, which was the low a few months ago. But if it falls past that, I'd be really worried about them.
Yeah. All right. So thank you for sharing that. Do you have any last minute stocks, options, or any insight for the market for the rest of this week?
Man, really, I don't really give too much insight heading into the election. After the election, I'm really looking to get into a bunch of things. But until the election comes, I'm just going to be keeping it easy. I know I'm in those VXX calls like we talked about in Friday's video. Hopefully VXX can pop up, but if the market goes up, VXX will probably end up going down. So that's just the name of the game. If that ends up happening, it's kind of a gamble. And so I'm not saying for everyone to go out here and grab VXX calls, but I think that they have a decent chance of popping. And for $150 to $200 a contract, you can get some decent calls that expire next week. And if they go up, you can make some decent money on them.
Very high risk, very high reward with VIX calls. If the market tanks, these things will most likely explode. But if the market doesn't, then they'll probably disappear, you could say.
Yeah, only playing with money you're willing to lose. Just only put that money out there and don't even expect to see it again.
Yeah, it's a gamble. VXX calls are a gamble. High risk, high reward. We are coming into the elections this week. There's gonna be a lot of volatility, and just keep in mind, in the 2016 election, we saw the market pop after the election, but the world and the market is so much different this year compared to 2016. So please keep that in mind. There's gonna be a lot of volatility this week. And just the main thing is protect yourself. Don't over leverage. Make sure you have stop losses in place, and just risk management is key. So thank you guys so much for watching this video. If you guys have any questions, let us know in the comments down below. Other than that, thanks for watching.